If you're a freelancer or a small business owner and you've heard terms like general ledger, debits and credits, or trial balance, you might have thought that sounds like accountant stuff. I don't need to worry about that, right? Well, not so fast. Welcome back to the channel. And if you're new here, I'm Joe, a licensed, certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes. And I'm all about helping you take control of your money and live smarter. Be sure to subscribe to the channel and turn on all notifications so you don't miss any videos. And check out our blog site where we post every Monday, Wednesday, and Friday. Today, I'm going to explain what a trial balance is, why it matters, and how to understand it. Just a little can help you run your business smarter. So, why does caring about the trial balance even matter? Well, a trial balance is not just accounting stuff. It helps you catch errors, prep for taxes, and stay audit ready. Knowing the basics makes you a smarter business owner. So, let's start with the basics of what is a trial balance. A trial balance is just a simple report that lists all of your business accounts, like sales, expenses, assets, and liabilities, and shows their balances at a specific point in time. What's the goal? To make sure that debits equal credits in your accounting records. That's it. Think of it like a financial checkpoint. If the books are balanced, you're in good shape. If they're not, they likely there's a mistake somewhere. Here's a quick real world example. Let's say you're a freelance photographer and you need a new laptop to help with editing the photos that you take. So, you're going to buy a new laptop for $1,000. So, what we're going to do is your book entries will record a debit to equipment for $1,000 and then a credit to either cash or credit card, depending on how you buy it, for $1,000. Both sides are recorded, so the balances of the books. That one transaction affects two accounts, and that is the foundation of something called double entry bookkeeping. The trial balance shows the total of every account like this across your business. And if everything has been recorded correctly, the debits and credit columns will match. Okay, so why should you care? You're not an accountant, but as a business owner or freelancer, you still need clean, accurate books. And the trial balance helps with that. Here's what the trial balance can do for you. It can catch data entry errors. It'll help you prepare for taxes or reports. It keeps your books balanced and audit ready. And it makes sure your profit and loss and balance sheet reports are built on a solid data. It's like the quality control step before building your final financial reports. Okay, so here's what the trial balance doesn't tell you. Your trial balance won't tell you if transactions are misclassified. It doesn't show you your profit or losses. It can still be balanced even if you made a mistake. So while it can help catch math errors, it won't catch logic errors, like recording a personal expense as a business one. So another question is, do you have to create one manually? Well, here's the good news. If you're using an accounting software like QuickBooks, Waves, FreshBooks, or Xero, it's doing this all for you behind the scenes. You don't have to create a trial balance manually, but it's super useful to know where to find it and how to read it. Okay, so you may be thinking to yourself, hey Joe, this is all really great information, but when do I actually look at my trial balance? You should really look at your trial balance at the end of every month, especially if you're doing your taxes on your own. Your books on your own. Before you file your taxes or generate year end reports, you definitely want to take a look at it there. And when applying for a loan, grant, or investment, you want to make sure you have clean books no matter what. So that way you want to look at it at that time as well. If you outsource your bookkeeping, ask your bookkeeper for a copy. They'll know what to do. Let's walk through a really simple example. So, in our example here, as you can see, we have cash that's been debited for $5,000. And then we have a revenue, which is credited for $6,000. And then we have our equipment at $2,000 debit, office supplies, which is also debit, which is going to be $500, and then a loan payable of $1,500. Now, all total, our debit column makes $7,500, and then our credit total makes $7,500. So as you can see, our debits and our credits are even, and in each of these, if we wanted to, we could see and break out which one belongs to our profit and loss statement and which one belongs to our balance sheet statement. So this is what we're going to look for. We're going to look for if the debits and credits totals match like they do here, you're good. If not, it's time to do some double checking for errors. So you might be saying to yourself, hey, Joe, I'm a freelancer or I'm a sole proprietor. Why do I need this? And here's the answer. The answer is you absolutely need this information because you're still a business, especially if you're managing your own books, preparing financials for taxes, planning to grow or hire help, or if you're looking to apply for a loan or a credit card, or even apply for grants. Understanding what a trial balance is, even at the basic level, can help you make more confident money decisions. Alrighty, let's recap. Remember, a trial balance shows all your accounts and their balances. It checks that our debits equals our credits. It helps you to spot bookkeeping errors. You don't have to build it manually, but you should know how to read it. It's one of the easiest ways to make sure your books are on track. Got questions about the trial balance? Drop them in the comments below, or check the link in the descriptions for more resources. And if this video helped you, don't forget to like and come back next week to unpack year end accounting tips for small businesses.